Good morning, everyone. Happy Friday. My name is Daniel, and you're listening to the InfoVest Podcast. And today is Friday, December 11th, 2020. And so today we're just going to look over what has happened in the markets. So as you know, if you've been following the podcast for past couple of days, we had a sell-off on Wednesday, followed by kind of a trading sideways motion on Thursday during the overnight session. And then during the North American session, we had a massive pickup, massive buyers buying the S&P and NASDAQ, Dow, and Russell. The NASDAQ was the strongest during Thursday, and mainly because of this IPO frenzy and Airbnb that came out yesterday and had an IPO. So as we discussed about levels, we did see the S&P fall to a level, let me just pull out my chart here, to a level of 3644. And we had pretty strong support there where we picked up buyers, and we did prop up the market from there. So the S&P from there was just really trading sideways and consolidating there. As for NASDAQ, it kind of pushed out of that overnight session, and then later in the day it did kind of fizzle out. And as I look at the futures market today, right now, we are trading lower. We are trading lower in all indices, NASDAQ, Russell, Dow, and the S&P. Again, NASDAQ is still holding quite well. It is dipping, but it's not as bad when you compare to the S&P. The S&P is making lows as we speak, and they did break yesterday's low, where the 3643 support level, and we are trending lower, and so we'll have to kind of monitor and see how far this goes, and if there will be any support or bids again picking up in the S&P, pushing it back into yesterday's range. The levels I look for any potential support for today are in the range between let's say around 3637 in the S&P to 3607. So let's continue to monitor that. The overnight session low for today was 3627. We are bouncing off that level right now, but we'll see what the North American session does. It is Friday today, and we do have some macro data that is coming out, but nothing too major. Just to summarize that, we did have, starting from 5 a.m., we did have the European Union, the EU Leaders Summit, and the Euro Summit happening. And as we know, the first topic of discussion is BREXIT during that summit. And during the North American session, or before that, before the 9:30 a.m., you have core PPI. So that is happening around 8:30 a.m. And not really market moving, but it's inflation related, so something to look out for when you are trading bonds. And then 10 a.m. you have Michigan 5-year inflation expectation and Michigan consumer expectation. So this is the prelim report. Again, nothing so big in terms of market moving events. and you have FOMC member Quarles speaking today around 12:40, and then 1 p.m. you have the U.S. Baker Hughes oil rig count that is coming out. So nothing too major for today in terms of economic data. So it can be a quiet day, and you can expect kind of a slowdown in equity prices. So nothing really too crazy, other than just monitoring for any headlines that could push equities in either direction. And again, the focus for today in the U.S. market and U.S. equities is the stimulus talks. There is reports going on that stimulus talks are close to a breakdown. So just to summarize that, an article here saying that there's hopes on fiscal relief package for the U.S. economy are receding after Senate Republicans dug into the heels over the issue of liability protections for businesses, schools, and other entities. So again, you have Pelosi and McConnell, and they're still fighting for this package, for this $908 billion stimulus package, and it's still nothing's going through. It's still all politics. The Wall Street Journal reported that aides to Senate Majority Mitch McConnell sees no possible path forward for the $908 billion package crafted by bipartisan group of lawmakers due to its failure to address the issue. So again, they have key issues that they're fighting for, and no one's agreeing on each side, especially the issue of the liability protections for businesses, schools, and other entities. So progress on stimulus package is also being held by a familiar piece of political theater over extending the government funding, which is due to expire Saturday, a stopgap spending bill designed to cover next week's business and postponed on Thursday. So that's a temporary issue. I'm pretty sure the stopgap funding will be resolved quickly, probably before the $908 billion package. But again, another thing to keep an eye on. So we also saw a sharp rise yesterday in initial jobless claims last week to a 3-month high over 850,000. Appears to have also little success in concentrating lawmakers' minds. So again, all talks, all stimulus talks, politics talks. It's all jumpy, it's all yo-yo. When I look at the S&P, we are off the highs of about 3,700, and we are now around 3642 as we speak. So again, we have to monitor the developments. We did come off of a sell-off due to the stimulus talks, and we are overnight coming off. We did have a sell-off overnight, and so we'll have to keep monitoring if we continue in this range. Do we go range mode and then a breakout either to the upside or lower? Or during the North American session, do we have a complete breakout? So the key is to keep looking for those buyers and sellers and those support levels to see where is the halt in this selling that we're currently having. It is December, so when I look at my calendar here, we do have 3 weeks till the end of December. We can expect a Santa rally. At the same time, you start thinking about what to expect in terms of equities. There was also a report that retail call options have been at all-time highs. There are retailers that are buying call options at these levels, at pretty high levels. So you start to think, you start to be a little worried because, you have this buying happening at high levels. And if there is big institutions and smart money and big money that is coming out, and they decide that the year end is here and we have to sell some positions or reposition by the end of the year due to tax reasons, especially with Biden coming in next year, or January repositioning time to time. Yes, we do see historical Santa rally followed then by a repositioning in January, and then you get back into the earnings season. So, we could have a little bit of a stall there. We could get S&P to, if it does push us, if we do get a stimulus deal, we could get S&P pushing to 4,000 mark, which would be, a new record, and the Russell for sure hitting the 2,000 mark, which would be a record, and we're not far from there, as Russell is around close to the 1,900 mark as we speak. So those are the couple of things that you have to monitor. Another big headline, big news, is the FDA. The FDA is working towards finalizing of Pfizer vaccine, as they voted a 17-4 vote for approving the vaccine and rolling it out in the U.S. So they're almost there. They're an inch away. This is all priced in the market. So if it does move, if it does move the markets and it does push it higher, we should see retracement back very quickly, because this is already priced in, and we can expect probably in the next week or two for the vaccine to be rolled out. So again, the FDA, they voted a 17-4 vote for approving the vaccine. So they are looking to go ahead with it. Other than that, in the bond market, the long-dated Treasury yields were broadly lower. The Treasury Department sold about $24 billion of 30-year bonds at a high yield of 1.665%. And we had bonds we're seeing yields coming off right now, and we are seeing a bid in from yesterday and until now, again due to the stimulus talks. We also seen the dollar weaken after the data showed that the number of Americans filing for first-time claims for unemployment benefits increased more than expected last week, as mounting to the new COVID-19 infections. And so that's something to monitor. We also see gold was also propped up. Gold eased as its failure to significantly breach the 1850 level. So there seems to be a technical level where it is bouncing at 1850, and there's less aggressive buyers, so you're getting strong sellers at that level. And again, gold play, like I mentioned before in the previous podcast, we're going to have to see what the Fed says. The stimulus bill, the U.S. dollar, we get a U.S. dollar, we should see U.S. dollar lower, we should see gold a little bit higher if we're getting QE and pumping of more from the Fed, more dollar from the Fed, then we can see gold higher. Stimulus, also same thing. So we'll have to keep watching and looking out for that. The euro jumped also after the ECB disappointed some investors looking for a larger stimulus boost, while sterling fell based on BREXIT talks. So let's just focus a little bit on EU right now. The euro. Like as I explained in my yesterday's podcast, everything was expected. You had the 500 billion euros of PEP, which is totaling 1.85 trillion in euros in QE in stimulus for the EU, for the European economy. And the duration of the program extended to the end of March 2022. We also saw the TLTROs operations increase from 50 to 55%, and the APP program also at 20 billion euros. So this is all expected. We did hear discussions of the ECB talking about PEP and starting at a number of 750 billion euros last week, but as we know now that wasn't true, and those rumors weren't true. We did actually just get the expected of 500 billion. So, I mean, like I said, this is all expected. Nothing too amazing. If we did get a bigger package, if we did get that 750, we could see the euro sell off, but it didn't. So it was considered neutral, and it disappointed some investors. So we did see a rally in the euro. And as I speak right now, overnight we did see a little bit sell off in euro, and we're currently at 1.21 in the euro. And in terms of Brexit, well, there's a couple of news items and headlines that I want to share with you. The EU Commission chief sees more chances of no Brexit trade deal happening. We also had the Irish PM, Martin, tweet, and I'll quote his tweet right here. Huge challenges remain on EU-UK trade deal. I hope common sense will prevail. A deal is the best interest of Ireland, the EU, and the UK. So again, a lot of negative talks are coming out, and you can see the pound, the British pound, falling to new lows of 1.31 handle. So we're seeing the pound fall off right now. We also had the senior EU official saying that Sunday is the 10th time we've had a timing for Brexit, with impression that this time it's going to be the last moment. So again, Sunday, you've got to keep your eyes on Sunday. EU's von der Leyen said that we decided on Sunday whether we have conditions for a deal or not. And this is the person who is negotiating on the EU side with the UK. And they also said that she also said that they have not bridged the differences on fisheries. So fishing in the water territories are in debates right now, and it's a place where the UK and EU are stuck on, and they're not able to come to an agreement there. And the UK would remain free to decide. EU would adjust market access conditions as needed. This is not to say we would require UK to follow us every time we raise standards. So back and forth talking, you had the UK and EU meet for dinner. Nothing came out of it. They said we'll push it to Sunday, and then you have reports today saying that Sunday is going to be the last time, and things are not going well, and they're still not deciding on the fishery and the water territories and all that. So, the headlines to watch out for Sunday would be Brexit. And probably on Monday, it's very hard for me to guess whether something is going to come out of it. It's really a 50-50, and how things are looking right now in the pound, it's coming off, and investors and traders are not liking it. I'll tell you one thing for sure: if a deal comes out on Sunday, you will see a huge relief rally in the pound. A huge skyrocket in the pound, just because of all this negative news that is coming out. So, we just have to monitor the pound and keep seeing how things are going with that. We also have seen some reports from the first mover, which is Britain, who were the first to vaccinate their citizens. We're seeing some reports of adverse reactions to the Pfizer vaccine. Some people having certain reactions regarding to the vaccine. Again, something to keep an eye out. This could be market moving. You could have a knee-jerk down if it comes down that many people start reporting that the vaccine is causing a lot of reactions. And if for any reason there is a halt in the vaccine, and you have kind of a pullback from the vaccine and they stop using it, for sure that will create panic and tantrum in the markets until you get the next headline of something to soothe that negative news. So just to keep an eye out on that. Oil on the other hand had a marvelous day yesterday. Just to spit out one news, Russia, OPEC Plus are expecting to have a meeting together in December 16th. And we've seen oil prices rise and Brent surging above $50 a barrel for the first time since March. And this oil prices and gasoline all rising and all fueling on the hopes of faster demand and recovery as countries start to roll out the COVID vaccine. The bullish sentiment offset of a large increase in U.S. crude inventories that showed there was still ample supply available. It's not that every day that market ignores weekly builds of U.S. crude inventories. So that was very odd, when you had a huge build in crude, huge oversupply in crude, the data that came out on Wednesday. The markets did sell off, but it picked up a bid very fast. And yesterday it pushed up even higher. Again, this is all on the back of vaccine news. Demand is coming back. When you start hearing headlines of, China is back almost at 90% level or higher in terms of the oil demand, and you hear about airlines, when airlines come back to same levels of previously back a year, 2 years ago, you will start to see that demand is coming back, and you're seeing that in the prices. They're pricing that in, that demand is coming back. That's why you're seeing that there are strong buyers in the oil market. So, how long this will last, we'll have to see. That will be a discussion later on, probably in a couple of months from now, and especially in March when you get kind of the 500,000 barrels per day kind of ending. If that switches or changes and the supply production increases, that could possibly change the outlook for oil. And, it's expected that other countries will continue to pump, and I wouldn't be surprised if some countries go above that 500,000. And just some interesting news that I thought I would share, something different. This came out from CME, and they mentioned that the E-mini NASDAQ 100 trades one standard deviation below its 5-day moving average. So why that matters is they have some statistical reports here that says that 56%, 24 out of 43 times, the price has increased 5 hours later after an average of 65 points. The maximum price increase has been 289.25 points, and 42% of the time, 18 out of 43 times, the price has declined 5 hours later by an average of negative 104.76 points. The maximum price decline has been negative 383.25 points. So for any technical traders out there, this is a pretty interesting, report or news or article that came out from CME. So thought I would share that. And in terms of some stock-related news, as I mentioned before, Airbnb was the highlight of yesterday. It reached to a price of $146. The IPO price was at $68. So, you're having these blockbuster moments with these tech stocks, and kind of reminds you of back in 1999 or 2000, where the dot-com bubble, where you're getting all the DoorDash and Airbnb stocks coming out. And it did prop up, and then right away Airbnb sold off. Not surprising. I generally stay away from IPOs, generally because the prices have been very much propped up, especially from the primary to the secondary market, and you have the bankers propping up valuation. So it's not something of an interest for me. Maybe later on in the future, but right now at these levels and these valuations and price, not attractive for me. In terms of another interesting news, United Airlines, they plan to invest in carbon capture project to be 100% green by 2050. So here in the article, they mentioned that United Airlines said it had committed to a multi-million-dollar investment in a project to remove carbon dioxide from the air through air direct capture technology as part of a plan to be 100% green by 2050. The Project 1.5 is a partnership between Oxy Low Carbon Ventures and Rusheen Capital Management that plans to build the first U.S. industrial-sized direct air capture plant that would permanently sequester 1 million tons of CO2 each year. That is equivalent of what 40 million trees can do, but covering a land area about 3,000 times smaller. United said, adding that direct capture technology is one of the few proven ways to correct for aircraft emissions. So, companies are moving towards more of this green kind of space, green energy space, especially with Biden coming in. You have Biden, who's pro clean energy and wanting to put a lot of money into clean energy. Again, for him being able to do that and really reach to his maximum potential, it would all come down to January 5th, 2021, the Georgia Senate runoff. Again and again, I mentioned this before in my podcast, that you have to keep an eye on that. If you do get Democrats controlling the Senate, then great. These clean energy stocks will do very well. I expect that and the expectation right now is that Republicans will have Senate majority, and if that happens, you could see some of a dip into this clean energy market. Other than that, nothing else. Friday again is kind of a quiet day. Focus again comes back to, for the U.S. equities, is stimulus talks, vaccine, and you also want to monitor the pound for any BREXIT talks. And let's see any kind of, in terms of technicals, any strong bids or any big buyers that are coming in, longer time frame buyers that are coming in that could shift the momentum and the direction of the markets. So stay tuned for more. And hope you have a great Friday, and hope you will tune in to the next podcast on Monday. Thank you. Appreciate it. Bye.